Welcome, everyone, to the Loans Incorporated podcast. I'm your VP, Alex Pagano, and we have Senior Vice President Don Thomas joining us here today on the podcast.
Hey, guys. How's it going? Thank you, Alex, for having me today.
Of course. All right, let's get right into some fun things, Don. Really quick, I have to ask you, what are the top 5 pasta spots in Northeast Philadelphia?
Man, you always get me on these, bro. For me, again, people, please. For me, my top 5 pasta places in Northeast Philly would be obviously Cafe Carmela, Carmelo.
Where are you putting them on? Cafe Carmela, where are you putting them at?
1.
1?
Yeah. I have to go back to Joseph's for their Diablo pasta as number 2. Number 3 and 4. Oh, Tuscany Restaurante on Ron Street. It's a hidden gem on Ron. Tuscany Restaurante as number 3. Number 4 and 5, man. I don't know, bro. Throw some of your bangers in from Northeast.
Yeah, there's actually a lot of pretty good spots, but let's keep it the top 3.
Top 3.
What's your top 3?
Top 3 Northeast for pasta. In my opinion, for me, number 1 being Cafe Carmela, number 2 being Joseph's Pizza, and number 3 being Tuscany Restaurant.
Awesome.
Oh, Ristorante.
Anyway, all right, let's put a pause on the list and let's go into some mortgage related content. All right. So anyway, today is March 6th of 2026, and some of the rates we'll be discussing and stuff that's to today. So if you're watching this a year from now, 6 months from now, a lot of the rates,
hopefully the rates got better.
Yeah, hopefully they got better. And I'm not even complaining because the rates have gotten a lot better in the recent couple months.
This is the lowest rate period in the last 3 years. This is the best time compared to 3 years ago.
Yeah.
And it's only been higher in the last 3 years. So right now, Alex, like you said, March 6, 2026, 6.5 for DSCR, low 5s for conventional, high 4s or mid 5s for FHA. These are great rates, man.
Absolutely. I want to go into something new, though. We have a major announcement at Loans Incorporated. Loans Incorporated is now offering SBA loans.
I am excited, bro. Small business loans are amazing, bro.
Yeah.
Tell me more about the SBA for the guys.
Yeah, so SBA loans, these are for businesses. So if you are a small business, we offer all types of SBA lending for your business needs.
It includes what else? Investments, real estate. Does it include equipment? What does it include in the SBA loan?
Yeah, that's a great question. So it encompasses everything. So pretty much if you come to me, Don, and you're like, hey, I want an office space for my business, and there's a building here that I like. It has 5 apartments and a commercial space on the bottom. This is perfect for you. You can put your business on the bottom and rent out the 5 apartments above. So SBA, there's so many options with these SBA loans. What's your favorite aspect on the SBA loan?
Just hearing that the fact that you can buy a mixed use on an SBA loan. So with the conventional and FHA, you're capped. Conventional, you can't buy more than a duplex. FHA, you can't buy more than a 4 unit. And the FHA 4 unit, the commercial space has to be less than 49% square feet. But from the sound of it, SBA, you can be doing more. Tell me about SBA.
Yeah, so there's so many things you do in SBA loans. Some of the biggest ones are obviously business acquisitions. So you're buying a business, partner buyouts, equipment purchases. You can also refinance existing business debt. So if you have let's just say you're a salon owner and you want to buy out a partner and then buy a new building, these are different things you can do with an SBA loan.
That's unbelievable.
Yeah.
I'm so happy that Loans Incorporated has this SBA loan. I don't think a lot of mortgage brokers have that.
No, and I really think that sets us apart from a lot of other mortgage brokers. Not only are we offering wholesale pricing on interest rates, but now we're also offering SBA loans on a broker level. So that means you're getting the same great service as working with a mortgage broker, the same great pricing, and the same great experience overall. So you really can't go wrong. This is really what's setting us aside in our competitive advantage as a mortgage broker at Loans Inc.
Alex, my VP, just found more work for me to do. I was happy with conventional FHA. Now you add SBA. Tell me about the most recent closing, not closing you had, where the conversation you had?
Yeah. So, sometimes in this line of work, right, delays happen and everything could be going perfect. And it's not anyone to blame, not one person, but sometimes delays happen. Something wasn't cleared, something wasn't picked up on, and this could push a closing back a day or two. So we just had a situation that came up where the deal was supposed to close on a Friday, and unfortunately, due to the insurance not being cleared and the item coming back too late, we weren't able to get the clear to close until 4:30 in the afternoon. So at this point, you can't send out the wire, and realistically, the title company is closing at 5 p.m. if it's a Friday. So the closing gets pushed back to Monday. We can close Monday. We have to clear to close and all that good stuff. But the client said to me, "Hey, I want to talk to you about the sheet because the seller agent and the title company were saying that fees are really high and all this stuff." And I said, "Well, did you see the interest rate?" "Yeah." "Well, the interest rate's a 5.625% on an investment property. Most people are getting investment properties in like the mid sixes right now. So the way we work at Loans Inc. is you have two options. We're a wholesale investor. We're a wholesale broker, and we work with many wholesale investors. So the way it works is we give you a rate sheet. You can pick to get the lowest rate on the rate sheet, or and pay a reasonable comp. I think the comp was like $2,800, and that goes to the company. Or you could take a higher rate and have that built into the rate
And not pay the 2,800.
Correct. So most mortgage companies, they just give the rate that has it built in. But I think for an investor who's trying to squeeze as much cash flow as possible, would you rather take the 6% or the 5.625% and the cost only being $2,800?
One-time cost.
One-time cost.
I don't know if you know this, Alex. I was at a brick and mortar bank. Not going to mention the names, but when I was at there, I felt like I was doing my clients injustice. I was not giving the best service because of what you just said. Because I didn't know, as a first-time loan officer, I worked at a brick and mortar, and I was only able to sell one size of loan product and one rate. And then when I was getting constantly shopped is when I realized, how are other lenders giving far better pricing at a far better cost? And how was I getting constantly beat? That's when I realized, and that's why I became a mortgage broker, left the brick and mortar bank, and started becoming a broker just for what Alex said. Every bank, every morning will give you a rate sheet. And that rate sheet, you can have rates from as low as today's rate, 5.6, as high as 6.5. Depending on the loan officer, depending on the broker, you can build in any cost you want to any rate, or you can just get a par rate. And for people like us, and we work a lot with investors, and we have to be competitive, but we can afford to be competitive, being at a small mom and pop mortgage brokerage company, because we can sell par rate.
Yeah. So think about it this way, right? If you go into a McDonald's franchise and you purchase a Big Mac, and you're like, why is a Big Mac $10, $11 now? Well, you have to think, what's a Big Mac paying for? Obviously, you're paying for the ingredients, the beef, the bread, cheese, all that stuff.
The basic stuff that every burger place is paying for.
Correct. Then you have to pay the employee's salary. Then you have to pay the franchisee. Then you have to pay the franchise.
Adding more
corporate
layers.
McDonald's. And you have to think about all the layers of every person involved in this burger. That's why the price is being bloated. Think of it with a mortgage. The interest rate a bigger company's offering you is bloated with paying multiple layers of salaries, executives, branch managers, VPs, the list goes on. So working with a mortgage broker, you are getting wholesale pricing. It's like going into Costco or even better, Costco commercial, like you're a restaurant. And you're getting that price on an individual level. That's why working with a mortgage broker, our rates are so competitive. Because if you go to the big box lender down the street, you're going to get the same loan product, the same 30-year fixed mortgage, and the rate's going to be higher. And the rate's higher because frankly, they're just building it into the whole entire price of the loan. So if you go to a mortgage broker, you see 9 out of 10 times, maybe even more, the rate is significantly lower.
Like kids say these days, no cap. In 5 years, I've been able to save more deals and be more competitive and give my clients way better pricing than I did when I was at a brick and mortar bank. I would like to thank you for that, Alex. Ever since you welcomed me to become a broker with you, a mortgage broker with you, you gave me the idea. And I was constantly telling you my stress of being at a brick and mortar bank, these big box lender company, was the fact that my only issue with this place is my pricing sheet is terrible.
Mm-hmm.
When the market is 6.5 and I have to sell at 7%, it's really hard to sell a conventional loan at 7% interest rate when a mortgage broker can do it for 6.5.
And also the worst part about the whole entire thing, you as the loan officer, when you're working at that big company, you're getting paid the least amount. So you have the hard work of not only you're talking to the client, you're building a relationship with the client, but you're selling them a higher rate for the same product that they can get elsewhere, and you're making less than what you would if you were to work at a smaller brokerage.
I'll be completely honest with you and completely transparent. At the big banks, 95 basis point. Less than 1% we could be possibly making on a loan size. And sometimes we have to undercut that just to even win the deal. So we're making a lot less, selling at a higher rate, like you said, and maybe winning that client over.
Mm-hmm.
But once we become a broker, and we don't have the overhead cost of big billboards, we don't have a CEO, we don't have a regional director, VP director, state director. We don't have all these overheads, and we don't have to pay for that. Being a mortgage broker and being at Loans Inc., we now were able to give our clients, because you came from cross country.
Yeah. I started at Toll Brothers,
Mm-hmm.
and then I actually went. Funny enough, I went from Toll Brothers to a broker. I was there only for a short period of time because they were doing a lot of lead conversion stuff, and the rates went up, and they ran out of leads. So I'm like, well, I have to build my own book of business. So that's when I went to cross country. And I will say, working for a top producer across country, I learned a lot about how to get business. But at the same time, when I got business in the door, I'm offering a higher rate than what I did as a mortgage broker. And I had a taste of it. I'm like, whoa. I have to look back into this mortgage broker thing. So yeah, I mean, I had to kind of, we both had similar backgrounds, both working on the retail end. But I don't know. I think working with a mortgage broker and being a mortgage broker, especially in today's market where there's less loan officers.
Yeah.
There's a lot less
when we
loan
started?
officers. Yeah.
There's, I think, north of 30,000 to 30,000 loan officers. Now it's below 20 from the latest report.
That's it.
I think. For the state of
That seems for the state of PA.
Yeah.
Okay. Yeah, I know it
nationally too. Everything has declined.
It has. Yeah, it's a really hard business.
Yeah.
But for the people who can stick in it,
Mm-hmm.
I think that there's enough business to go around that it makes sense. If you're a loan officer, you need to be tactically preparing yourself to put yourself in a position where you can offer the lowest rates,
Cheapest cost.
the cheapest cost for the client, which I believe it's your fiduciary obligation to do so anyway, and make a good living from it. I don't think you need to cut your compensation so you can pay, your branch manager and your regional VP their salary and performance bonuses. I don't think that's correct for the customer at the end of the day.
I 100% agree with you. And then also being a broker, what I was doing at a big box retail company was selling just QM loans. I was maxed out at 4 units. I couldn't do DSCR. I couldn't do buyers buying in their LLC name. I couldn't do anything non-QM. I couldn't do a bank statement loan. Nowadays, I can do bank statement loans to $2 million, $3 million. I can do jumbo loans. So coming to the brokerage side, I realized I can serve more clients at a cheaper cost at a better rate, where now I'm building more long-lasting relationship. Before I was getting the calls, I was getting people in to call, but I was able to keep them. Once I switched over to becoming a brokerage, I realized I can keep more people happy. And at the end of the day, if your clients are happy, as a broker, you're happy as well.
Absolutely. You want to hear something disgusting?
Tell me.
Do you know that mortgage companies are paying their loan officers less on DSCR loans and non-QM loans, like bank statement, P&L loans?
I thought it was just rumors.
No, no. I noticed this too because I remember when I was at a retail lender, my comp tier was less on broker deals. So these direct lenders, they don't have an in-house team for DSCR.
It was a 50 basis point, I think. I think it was less than 50.
Yeah. Like why
You're just getting a referral fee.
at that point, like, okay, if you're already being paid 100 basis points or 1% at a retail mortgage company, and then you're also being hit for doing a DSCR loan. And you know why, too, the worst part about it?
Why?
The worst part about it is these retail loan officers are paying the loan officer less because they're brokering these deals out and they're not able to fluff up the rate into the margin like they are with their regular direct lending channel.
You know who's really losing? The client.
The client.
I felt really bad. I think I remember that in my at my place too as well. Anything you brokered out was 50 basis point, and it was already a highly inflated rate.
Yeah.
So those clients were only going through with those loan officers and my people I mentored because of their relationship. They didn't know any better.
Yeah.
And that's not anyone's fault. I mean, you end up sticking with your same realtor, same loan officer because of relationship, and they can get it done. But if you look at it, it's getting done at a way higher cost.
Want to hear a really, really sad story? Okay, so I had a client, right? They were refinancing out of a fix and flip loan. So they have a balloon loan, it's ballooning, and they're going to be paying a bunch of interest. They have to get out of this loan. So what happened was their client, I worked with them before in the past. I don't know why they didn't come to me first, but I was talking to them about their fix and flip loan because we did it together. I'm like, hey, are you selling the property or refinancing it? And they're like, well, we're refinancing. I'm like, okay, what terms are you getting? Do you want to hear some other offers? They're like, yeah, sure. So we got the terms. Everything was great. But they were in a predicament. They felt really bad about breaking the news to the other loan officer. They were going to do it because the terms were so much better. We were half of a percentage better. We were giving a lender credit back. I mean, they were getting I think a 3-year prepayment penalty. We were offering a 2-year. It was just better terms all around, way better for the client. So the client broke the news to them. This loan officer put them on an insane guilt trip. I mean, made them feel absolutely terrible, saying, how can you do this? I'm not going to transfer the appraisal to you. I put in so much work. This is unbelievable. And the client's, trying to tell them, hey, but it's just a better deal. It's a lot better for our property.
Can you imagine your loan officer gaslighting you to staying into a deal that's higher rate, higher cost?
It's crazy. And, the client said to me, like, what should I do? And I said, well, I mean, you have to do what's best for yourself. But they were such good people. They felt so bad that they're like, hey, they can just close us this Thursday. I'm just going to take the higher rate and just eat the cost because they felt so bad because that loan officer guilt them so bad. But we as loan officers, we take an oath to have a fiduciary responsibility to make sure the client's getting the best terms that they can. So in my perspective, right, if I have a client who comes to me, here's what I'm getting offered. Can you beat or match this? If I cannot do it, I'll say, listen, this person is offering you a phenomenal deal. If they're offering that, you might not get as great a service as me. I might, you might not, get the close on time or whatever the case might be. But if you can get those terms, that's completely up to you. You go ahead and do it. If you can get better terms, then go for it.
Alex, after becoming a broker, mortgage broker, I have experienced the same as you have. And the fiduciary duty, like you said, as long as I know I can beat the deal and I have beaten the deal, but they don't want to leave, I'm happy at the end of the day. I'm sad I lost the deal, but overall I'm happy because you know what? That is the best thing I can do for anyone and everyone out there is the fact that we as mortgage brokers at Loans Inc. can offer and beat anything that's out there. And when we beat and they still don't want to leave, that just shows how loyal that person is. And at the end of the day, I want my clients to be as loyal or faithful, but it is what it is. But I've lost more deals in the last 12 months of becoming a mortgage broker on people who just didn't want to switch and they don't want to make the other person feel bad. And I, at the end of the day, think, you know what? This client is faithful, strong. And sucks that the other one offer is gaslighting them. But you know what? Those loan officers know. And the only reason they get pushed into that corner to guilt trip their client is knowing that they have no other way to sell that deal. Other than guilty conscience, how else can you sell that deal?
Yeah, I really do think that being a loan officer in 2026, you have to position yourself to offer the best terms possible. In order to offer the best terms possible, you have to work at a mortgage brokerage. You have to be a mortgage broker.
No, I 100% agree with you. And I always want to always thank you for that, man. Thank you for taking.
You don't have to thank me, man. You don't have
taking me from a retail bank to become a mortgage broker. And always thank you for that.
Yeah. Let's talk about some. Gosh, there's so much to talk about. Let's talk a little bit about DSCR loans, just briefly, because these rates for DSCR loans are so good. I mean, when you think about DSCR loans, you think non-QM, you think you're paying an arm and a leg for these rates, but
Not today.
they're phenomenal.
I will tell you right now. I have a deal in Florida, 1.6 million, 30% down, 6.375 bank statement loan. Yeah, they're making on the husband and wife is making $240,000. She has a great W-2. He has a great 1099. As you know, on a QM, you have to have the same, and which you have to have W-2. You can have 1099, but you have business expenses. You have to look into that.
You do your taxes.
You have to show your taxes and stuff. With the bank statement loan, you just need to show 12 months of what bank deposits you're getting. And this couple is getting about $24,000 per month bank deposits. That means from her W-2 job, his 1099, their other business. It's on average in the last 12 months bringing in $24,000. So that means we can use 50% of that for a mortgage. So 50% of $24,000 of bank deposit is $12,000. Their $1.6 million purchase in Florida is mortgage is coming out to $8,000. That means they're way below 50% DTI, and their rate was 6.375 on a non-QM. Unbelievable.
That is unbelievable. I'm running into a lot of even if you like elect a prepayment penalty, I'm seeing a lot of rates like 6%, 6.125 with like a 5-year prepayment penalty. This is insane.
No one's unless you're a flipper. If you know you're flipping a property, you won't be going into a 5-year prepayment penalty. If you're an investor and it's supposed to be a hold, a short-term hold, a long-term hold, you're going to end up holding it for 5 years anyway. Because unless you got that for dirt cheap, you have to be smart enough to not elect for the PPP, the prepayment penalty. But if you got it for market value, you know tomorrow is not going to appreciate. So you might as well get the 5-year prepay, get a better rate, and hold it for 5 years. Yeah. Cash flow, pay down your principal, and then go to sell. And it makes more sense if you're not a flipper.
100%. And actually, something really cool we offer at Loans Inc. and at our company is we can allow a prepayment penalty in the state of New Jersey if you're closing an LLC. We can also offer in Pennsylvania a prepayment penalty if you're closing an LLC under $319,000.
Say that again for the people in the back.
Yeah. So essentially,
that's very key.
It is very key because a lot of lenders are not allowing a prepayment penalty in the whole entire state of New Jersey, and then you have to be over the $319,000 figure in Pennsylvania. So as long as you're closing an LLC in both scenarios, we can give you a prepayment penalty in New Jersey and in Pennsylvania.
That's amazing. So that means you could be buying something for a long-term hold in your mindset of a property. I mean, I'll keep this for a while, but not even have the prepayment penalty on it. That means 6 months, a year, 2 years from now, you could sell it. If the property appreciate, you got what you want out of it. That's amazing. And not a lot of brokers do that. So I'm glad we were able to do that for our clients.
Yeah. So we are...
And that's great for a first-time investor or second-time investor that, hey, I don't know if I want to keep this. So instead of bottlenecking them into a 5-year prepay, you're like, hey, your loan size is below 311 or 316. Let's take this rate, not lock you in for 5 years. You can hold it as long as you want. It's a 30-year fixed. Don't forget, at DSCR, you have variables, you have fixed. We're offering fixed 30-year fixed loans without prepayment penalty.
Or with.
And whatever you want.
You want it, if you have a $200,000 loan in Pennsylvania or New Jersey and you want a prepayment penalty, we can offer that. And not a lot of lenders can. Even on the wholesale side as being a mortgage broker, we are limited to the amount of wholesale and lenders that do allow it. But we have a select few that are phenomenal wholesale lenders that allow a prepayment penalty in those situations. So New Jersey, PA, we're open for prepayment penalty. We are also still lending DSCR loans in Philadelphia. A lot of lenders got out of Philadelphia due to a massive fraud ring. So this is crazy. Did you hear about that?
Yes, I did. Unfortunately.
Yeah, so there was a massive mortgage fraud ring in Philadelphia. I think also Baltimore got impacted as well. So a lot of lenders exited the market in those areas. But at our company, we can still fund you with a DSCR loan, closing your LLC in Philadelphia and Baltimore as well. So I think we can do 50 states DSCR.
Yep.
So if you want to find out what states we can lend in, send us an email or a DM here, and we can let you know if we can help you out in the state that you're in.
To all the investors out there, anyone that's trying to get their feet wet, trying to learn more, reach out to Loans Incorporated on YouTube, LinkedIn, Instagram, Facebook. Reach out to Alex Pagano or Don Thomas and learn more. Get your knowledge up. Get your street knowledge up on financing. Because if you can orchestrate or if you can figure out the best instrument to power your purchase at the best cost, at the best rate, you can cash flow better than some of these other properties that are buying at a higher rate, higher cost, and they are bottlenecked into a certain product. Ask us if profit and loss statement is better for you, bank statement loan is better for you, a DSCR is better for you. Ask us if conventional, FHA, what works for you, and have our team review your application and give you that service.
If you are a loan officer and you're looking to make a strategic move to a company that not only looks at your growth, but your growth for the next 10 years, give us a call. We're happy to sit down, meet with you, and talk about what we can offer to you and offer to your clients. So our message DMs are open.
If you don't want your branch manager, your vice president, your CEO dipping into your basis point, come on board to Loans Incorporated.
Yeah. Donna, can we, the last couple of minutes, can we just do a couple fun segments?
You can.
All right. I want to ask you, I'm going to ask you a couple fun questions. We can just like separate this.
We're gonna practice it.
A couple lists and stuff. Yep.
It's still rolling. We can do it, right? Or
Yeah, I'm just making sure that you are in focus and not your microphone. So let me switch to you.
about Igor asked, do you still need him or are you good? I can cancel him, right? Did you get the other guy to start?
Well, with my uncle. My uncle is just going to help.
Okay.
But I'm going to ask him, would he go to New Jersey?
What part?
Wildwood? South?
That might be tough, bro. Because I don't think there's a lot of
Exactly.
the
I need him
clients
for a
over there.
full renovation.
Is it a big project?
I mean, just as big as what he'd be doing at my house,
What did he quote you for your house?
like 20,000.
Talk
It
to
was a
him.
little high, honestly. It was a little high.
Is it high? What's
little
uncle doing it for? That's 20,000 just labor, right? Wait,
Yeah.
20,000 for that bathroom?
No, he wanted like over $8,000 for the bathroom, 8,500 or something.
That's a little high. I'm surprised he gave you that. I'm sorry, bro. Ben
It's
and I
okay.
are our go-to guy. He gives
My,
us 3 and 4s.
My uncle is gonna do it for like $8,000, but like he's licensed, been doing it for like 30 plus years. Like
Okay, you
he would
getting-
charge a person like 20 grand for it.
He would charge me 20 grand for the 8K he's doing for you.
Yeah.
Okay.
So if I'm gonna pay that much, I'm just gonna my uncle will
Makes
do
sense.
the same price. But to ask him if he can do New Jersey.
He's not licensed, so he can do anywhere.
Well, yeah.
He's not limited. It's just that Wildwood, because he lives in the Northeast. He lives near us, so
Okay.
he's going to do Wildwood. That's going to be a drive. I can ask.
He can
I'm
stay there if he wants.
If you want, yeah, I can tell him. That, yeah, if you want. It's not bad, actually. Summertime. Yeah. Okay. Well, I'll talk to him.
Okay. All right.
You're ready.
All right. Ready? Don, do you ever go to Wawa?
Yes.
What is your go-to order at Wawa?
Ooh, it's my buddy Ubby's favorite option. You customize a hoagie and you make it a pepper hoagie. You hit all the peppers, and that's
Okay, dude, list it out. List it out for the viewers out there.
the bell pepper, the green pepper, the banana pepper, the jalapenos. Then you get the black pepper. Then you get some either meat or veggies. That's
What kind of meat?
I mean, I like my turkey and chicken from Wawa.
So you get like a turkey hoagie with every single pepper,
Every single
including black pepper.
There's a story behind it.
Is there cheese?
Yeah. And then the
Okay.
pepper jack cheese.
And what kind of bread? Like just regular white bread?
Regular bread's fine.
Like white roll?
Yeah.
Okay, I'm sorry. I don't know if I should be disgusted or amused. This is a crazy order.
2000. I'll tell you. 2008 summertime. It was a night of going out, and then the buddy that could drive went to Wawa, and he just clicked every single pepper he liked, and he bought like 4 of those, and he came back, and then the next morning we're sitting there we're like, oh, thank you for buying Wawa. Let's take a look at it. And we bit into it, and we all immediately spit it out. I was like, what is this? And then we looked at the receipt, and it was just pepper on pepper on pepper. So the buddy we sent or we designated who can best drive was the least best driver in terms of like he shouldn't have drove. And he ended up just buying everything at Wawa, and he just went to town on it.
Did you eat it? Like, did you?
We spit it out. We went halfway through the sandwich, and then I was pretty hungover, so that is we joke about it. We joke about.
You
that.
don't actually get it though. You actually.
No. I mean, I do like I do like peppers. I do like spice. I do like the pepper jack cheese, but that's not our go-to order. But anytime someone says Wawa, that immediately comes back. That night, that time period of my life where just going out having fun, and then we end up just going to Wawa, just grabbing something to eat. But that night, most of us couldn't make it to Wawa, so one friend went and grabbed it for us, and he ended up ruining Wawa for us. What do you get?
At Wawa?
Mm-hmm.
Okay, I get the wheat roll because I like the wheat roll. I get everything toasted. I get American cheese. I get the chicken cheesesteak, and I add buffalo. I get.
You're
pretty much
sober enough to
buffalo
click
cheese.
that. That's the difference.
Yeah. There was actually an order that's pretty good. I haven't gotten it in a while, but what it is, it's a roll. So white roll with the cheesesteak meat, double cheese, pepperoni, ketchup, and mayo. That combination is actually pretty great. But this guy showed me when I was in high school, and we would go to Wawa during like summer camp for football. So we get like an hour break, and we just go to Wawa. And I'm like, wow, this sandwich is actually really good. I haven't gotten it probably in, like since I've been in high school. So like over like 10 years.
Do they still have the hidden menu at Wawa? The black bird, the Wawa bird? Is that still a thing? I remember at one point, way back in like at least a decade ago, the Wawa menu, if you click on the right corner, there was like a little black. If you click on the black icon, it was a secret menu.
Really?
Supposedly, not supposedly. It was a secret menu where they just had like extra sandwiches, just more toppings on it. I don't know if that's still a thing. Wawa used to be my go-to during college days for sure, and post-college days. But then, it cut back on drinking, cut back on now. Wawa's not your go-to thing anymore.
Don, what's your favorite restaurant in Philadelphia?
Favorite restaurant in Philadelphia? It would be Rangoli on Bustleton, Kazi on Bury Road.
You have to pick one, just one.
That I can eat every day.
Yeah.
It's not really a restaurant. It's just Chipotle.
Chipotle, bro.
Yeah, I know. It's Chipotle.
It has to be a Philadelphia restaurant. It has to be a Philly restaurant.
I do like the Tito's cheesesteak, and I do like Cafe Carmela. Cafe Carmela takes a lot of my money. I know Tuesdays and Thursdays, I am buying from there.
What are you getting from them?
Definitely their Mag's Pizza, their cheesesteak that's voted #1 in Philly right now, and then their rigatoni.
They are very good. Yeah. I do go there frequently. You know, my favorite thing from them is it's actually crazy because I'm not a huge salad guy, but they have this meatball salad. It sounds like a crazy combination, but it's these like 2 massive meatballs, red onion, romaine. It has like I guess like a red wine like vinegar type dressing, and then like this whipped ricotta. It is, I don't know why, but it's just amazing.
I gotta give that a try. And then also Omakase Ogawa just got nominated in Philadelphia's top 76 restaurants in the Center City of Philadelphia, and they have a great bar, Almanac. Check it out in Center City, 2nd and Market, between 2nd and Market and 3rd and Market, Almanac and Omakase. If you love sushi and you love great cocktails, it's a great place to be.
Awesome. I'm gonna give you one more little question here. All
I get roasted. I get roasted for these questions, but I'm looking for it.
Okay.
Let me hear it.
Would you rather go to McGee's on the river or Dogwoods, Tarsdale?
McGee's on the river. I don't think I'm allowed back in Dogwood.
Yeah, man. I actually heard a lot of amazing things about Dogwood. I'm sorry, Dagwoods. Dagwoods. I haven't been there yet though, but apparently the food's amazing.
Why I called it McGee by accident, because that was the time I was buying my multifamily on McGee app. So I had my realtor, the listing agent, a lot of people calling me, the title company, trying to get information on McGee app. It was a tricky deal, and I mispronounced the other property because I was just that whole week, that whole 10 days, I was trying to close on that.
What about Dogwoods though?
That I mean, what do you expect, man? I said Ashbury what do you expect, man? That's just me.
That's hilarious, man. Iconic. That was an iconic moment.
People still bring that up, bro. I can't be seen in some of these places anymore. And Joseph's hate me because I put their bar on the map.
Really?
Yeah, the bartender was like, "Why would you even mention this place? It only has 6 stools. This is not like everyone's bar." I was like, "It's not everyone's bar, but it's my bar. I like this place. Like, we don't want more people in here." I was like, "What do you want me to do?"
That's crazy. I've never heard of a small business saying we don't want more people, but go there anyway.
Yeah, I did. Oxford, go check it out.